Hi guys, we're gonna have Jamie Hammond on today. She is with Hub Real Estate, and the only thing that's better than one Jamie is two Jamies. We're gonna be live at 5. So once I see her come online here, I will invite her to join us. But for now, I'll just tell you a little bit about what I'm doing while we wait. I met with a bunch of local women this morning in Loveland. We met for, we're calling it right now, we're going to come up with something cooler. We're calling it FOCO Coffee Babes right now. And what we're doing is essentially just sitting down and making connections and asking empowering questions and trying to be a little bit more outside the box with our personal relationships and professional relationships. So join us next time if you'd like some information on the group meetings that we do. We have a couple events each month. Just reach out to me and let me know. Other than that, we're just working with a new January market. So I was on earlier with Sean and Ian at the Barefoot group at Remax, and they were talking about how current list to sale price is at about 99%. So you're listing, that's 100% of sales price, and then what you end up selling for is about on average 99%. And that's really interesting because about 12 months ago, that's not what we were seeing at all. I was seeing 125%, sometimes 175%. So definitely a different market, but not a bad market still for sellers. You're getting what you're asking for. Yes, you're not having bidding wars, but it may be a better environment, a little less stressful. And hi, Brent. Sounds like, okay. Well, until then, today we're going to talk a little bit about closing costs. Once Jamie logs on, I will add her in and she will kind of help me out with this as well. But essentially I'm just going to kind of go through in the order that you would get if you were under contract for a home and you got a loan estimate. So block A, the first block on page 2 of your loan estimate, which is a required document anytime you're under contract, this is going to go through lender charges. So your lender charges are going to be any points that's going to be associated with your interest rate. Points are essentially prepaid interest, sometimes called discount points. They'll also include any lender fees. So that's like processing fees, anything associated with the mortgage lender themselves. Looks like Jamie's coming in here, so I'm going to let her in and see how she's doing. Hello!
Hello. Oh, I'm having a little bit of a lag, but I think I'm here with you. We are here together.
Two Jamies
Lovely.
is so much better than one.
Okay. Yeah, always. Well, you were talking about the document, so keep on talking about that, and I will hang out here in the wings.
I'm just saying hi to the people who joined us. So Block A is also going to include any origination charges. So that could be the commission for your lender if they charge it that way within the loan estimate. That could also be, sometimes there's an origination charge for down payment assistance programs. But I was going to ask you, in your experience, what kind of questions do you see about points and discount points associated with interest rate and buying down your rate?
Really great question. I would say right now, the question that I'm getting the most when it comes to points is how much can I buy down my mortgage rate with how much it takes in points. So how much in points, what does that translate to a reduction in my mortgage payment? Since we're seeing we're seeing higher mortgage payments because of higher interest rates.
Yeah, and unfortunately, it's not, what's the word I'm looking for? There's not like a parallel association between the cost and the buy down. It's going to be based on the market that day, but you can have your lender quote out different buy downs. And it's something that I talk a lot with my clients about is determining recoupment with mortgage interest rate points. So let's say you're getting quoted a 6.375, but you're also locked in because you locked in for a whole day, which is the normal case for a 6%, right? Let's say it costs you $6,000 to buy in points from the 6.375 to the 6%. You know, if that's going to save you something crazy like $600 a month and you're going to break even in 10 months, that might be a really good option, because if rates don't drop in the next 10 months, you're going to recoup your money, or you're going to be really close. If you have to refinance early, you're going to be really close on that recoupment. Whereas if you're only saving $30 a month and you're spending that $6,000 to only buy down, you know, a couple points, may not be worth it for you if you plan to refinance next year. You only plan to have the house 3 to 5 years. You know, if you're renting the house after you move out of it, if you're planning to keep it long term, then you might want to look at longer recoupments versus shorter. So that's a great question. And yeah, although I can't tell you the association between the two, that's normally how I make a decision on whether or not it's a good idea to buy down a rate. And then temporary buy downs are a whole nother thing, which we should go over in a different video.
Very cool. Well, what about, so you talked about a few different things. You also used big word, recoupment. So when it comes to those big concepts like that, I feel like that's when things start to get kind of weedy with clients, certainly the clients that I have. And what I care about the most when I have a client who's working with a lender is that the lender's breaking stuff like that down for them. So what does that look like? Yeah. What does that math look like? Or what does that process look like?
Normally I try to compare 3 quotes at once, but the $6,000 one, for example, when you're saving that $30 a month, my calculator's on my phone, so I can't cheat and pull it down. That's going to take years. I know that for sure. It's going to take years for you to recoup that $6,000 upfront cost to that $30 a month monthly savings that you're going to get. It's kind of same thing with down payment. Like, you're trying to think, for every $1,000, how much money is this really going to save me? How long is it going to be worth it for me? And then for a lot of people too, it comes down to, like I said, if you were saving $600 a month for that $6,000 charge, you recoup in 10 months. But if that $6,000 is more important to you than cash flowing $600 a month, that's something we need to take into consideration as well. So financial and slightly emotional decision. If you only have $600 or $6,000 in the bank, maybe you keep that in the bank because it helps you make your mortgage payment, or we find a middle ground, right, where you're saving $300 and you're not spending a full $6,000. So yeah, we do have to break it down, but it is truly situational. That's why we like to reach out and get to know you and hear your situation. Is cash flow more important? Is cash in hand more important? Are you looking for a more balanced budget sort of thing that gives you both? It's kind of like a slider in that sense. So where you're paying more upfront, you're going to have a lower monthly payment. And we want to help you find that point as to where this one works for this house, and maybe for a different house, you want to put it here. So yeah, very situational, but we'll run that through for you. We'll break the numbers down. We'll say, here's the recoupment. Here's what I think based on your situation. What do you think we should do, and what other situations do you want to see to make sure you're comfortable purchasing this home? Yeah, kind of long-winded answer, but yeah,
sweet. Thank you.
It can get complicated. It can get very weedy. Knowing specifics really, really helps that. Yeah, from there, there's really not that many other closing costs. You've got third-party fees, so maybe your lender charges you for a credit report, maybe like $50. You got to have an appraisal done. I'm going to say $500 to $750. That's normally what we see. If you're up in the mountains, it may be a little more expensive. Sometimes it's a little cheaper if it's in an area where we have a lot of appraisers and it's a timeline that we don't really need to rush on. So it depends. If you don't need it for 2 months, they're not going to charge you $750. They're going to charge you maybe $450. So just keeping that in mind. And then anything else that could be third party would be like your homeowner's insurance and your taxes, but this is actually in a different box. So we'll talk about that in a second. Escrows, which you'll hear a lot because it means a couple different things, which is why it's nice to have a good team that will explain these weird glossary terms to you. But after that, we're going to be looking at a couple other third-party services, but this is going to be labeled services you can shop for, which is a little confusing because it's the title company piece. So the title company is actually chosen by the seller. As a buyer, you could say, hey, seller, I want to use this title company instead. And if you did that, they would probably require you to pay your owner's title policy, and we'll talk a little bit about that. So you could technically shop for this service, which is why it's called that, but in most cases, sellers are going to say, what? Why? Why do you care so much? And you probably don't even know a title closer. So in most cases, get your owner's title policy covered, use the one there. We're going to quote you out what we think it's going to be. So we're going to reach out to the title company once you're under contract, or if you're not yet, I use one of the highest title companies in the area, just because that way we have some buffer room and you're not expecting anything higher. But we quote out a lender's title policy and an owner's title policy. So title policy is insurance. You pay for it one time at closing, and it's going to cover your ownership essentially, right? So have you had kind of, what are the common questions, I guess, do you get when that title commitment comes out, when people talk about title and title insurance? Yeah.
What kind of questions do I get? Well, most of
They're
the
like,
time,
I
most
don't
people
even care. Just
don't
like,
even
please get this
know
out of my inbox.
what it is. Yeah. Yeah, and a lot of the time, we'll have those conversations somewhat leading up to the process and also during the contract process. But most of the time, it's pretty abstract, I would say, for a buyer. It certainly
Yeah,
was for me
me
when
too.
I was a buyer. And so I feel like some of the things that we run into and the questions that might come up
Yeah.
that maybe don't even get verbalized by a buyer unless
It
they
can
feel
seem
comfortable and are
really
given the
confusing.
opportunity to
Yeah, we
ask
give
those
them the
questions.
earnest money and then what?
Yeah. Exactly, right. Yeah, we give them the
Yeah,
earnest money and then that's where I go to close. And so really, really good point there, just because the title company is doing
on the back
so
end.
much for a buyer in the background. And when it comes to some of those costs, I think the biggest question are what are of those costs, what do they mean? So there's the lender's title policy, there's the owner's extended coverage title policy, which you talked about a little bit. There's all the stuff that
We
they're
got our
doing for title.
settlement
There's the
fee.
closing fee, which is
Maybe a
often
tax
charged.
certificate.
Yeah, there's
Yeah.
which is exactly the documentary fee to record it. A number of different fees that all end up kind of going into the
Yeah.
title fees bucket. But I think the important thing to know with that, and some of the questions I get, is that people just want to know that the title company that is working for them is actually working for them and that they
Yeah.
can trust the work that's being done. And most of the time that connection is hard to make when all of the rest of
Totally.
home buying is
Yeah.
so
So,
abstract. How do you explain
title
that?
insurance, I just try to break this down. Like, what is this covering? Like, why am I paying for this? And why do I have to pay for this? Because the lender is going to require it. Lender's title insurance is what you pay for normally as the buyer, unless for some reason the seller decides you're paying all your title fees. So having a good realtor that's going to talk you through that is important. What fees are we splitting? Is the settlement fee split at all? Stuff like that. So that is kind of like, we're going to zoom out for this one. And the zoom out version is you're going to pay them to close. So they have a notary that we're paying to close us and sign all the documents at closing and organize everything and make sure that we fund, make sure that you get the keys to your house. So they're working to organize with all parties that. And so we pay them normally anywhere from like $500 to $700 at closing. Honestly, sometimes less. I'm always going to be saying higher end stuff here online because I want to make sure that this kind of can trend with the time. If it gets cheaper, great. I get to tell you, oh my gosh, it's cheaper now. If it gets more expensive, I'm not really expecting this to, get out of time. But so settlement fee, we pay them kind of essentially to work with them, hold the earnest money, close us. Lender's title insurance, that's going to cover you against previous lien holders. So the title company is going to facilitate the payoff of any previous loans, and they're going to make sure that that is subject to essentially in the insurance commitment that they send out to all of us. And your realtor and me are going to be looking through that for any issues. So with that, let's say, for example, a small one, like a kind of more common one. Let's say that the seller paid Lowe's to put in a bunch of new toilets before closing, but they didn't actually pay Lowe's. They had Lowe's come to the house and then the check bounced, and now Lowe's is coming after you because you're the owner of the toilets now, technically. You could be like, I don't have a receipt. I don't even know what you're talking about. They can't give you more information because you're not even the person on his credit card account. You're like, what the hell do I do? Call the title company. We'll call Jamie's, but then we'll tell you, call the title company, and you have a lender's title policy, and the seller said they didn't have any unpaid work done at closing, so they're going to try to help us handle this, unless it was something that they previously knew about, and then they're probably not going to cover it. So if they find out about something, we'll find out about something, and we can negotiate with the seller to get it handled, or you can decide to take on that risk outside of the policy. Owner's title policy, kind of similar thing, except for it's going to cover you against any previous owners. Let's say you're buying a house in a divorce, or a house that years and years and years and years and years ago had been a divorce. And I'm trying to use common situations. There's a lot more complex situations this would come into play. But let's say that husband and wife split up, but the wife somehow figured out a way to sell the house without actually getting any of his signatures. And he didn't figure out because he's been estranged for a long time. And he finally comes back and he says, hey, I need half of my proceeds for the house. And you're like, who the hell are you? And he's like, the previous owner of this house. And you're like, slam, lock the door, call the police. Also call the title company and say, hey, this guy came by my house. He says he's owed half the proceeds. They'll look through the commitment. They'll be like, whoa, we just bought half a house. Cool. And they'll pay out that insurance policy because they missed it. Or
when they do their commitment search, when they do their work for us, they will find that and say, hey, the seller 15 years ago never signed off on this sale. Title is unsaleable. You can buy this house cash. You know, that's essentially how it would go in that case, so, or without insurance, which I wouldn't recommend. So yeah, I know that's kind of a long explanation, but yeah, what are they doing on the back end is super huge, and that kind of helps people to be like, oh, that's why I'm paying these fees at closing, and you'd have to pay that cash anyways if you wanted those coverages.
Yeah, and I think that just really speaks to just the not the importance so much of closing costs,
Yeah.
but why it is that they exist. All these closing costs that we're talking about, they're all the costs that really go to facilitate the transaction. And so, exactly, they've all got a reason, and we see line items oftentimes, but what's really happening in the background, assuming everyone's doing their due diligence, is that they're doing really good work to make sure that people are protected so that that kind of stuff can be taken care of in the future, like with title insurance or when it comes to your loan that they're doing. Yes, exactly. And so oftentimes, though, you know, people don't even know that they have closing costs to pay when they consider purchasing a home. Did you mention that at all? I'm not sure when I was like coming in, because I think that's one of the most interesting things about closing costs is that most of the time that's a surprise for brand new home buyers. You know, they're like, I've got my down payment, one house, please. And then it turns out that there are these additional costs for closing.
It's
yes, and then
there's
maintenance. Don't worry.
I know we tricked you. No, really, I hear that all the time, which is why I think this is such a highly searched term. When I was doing my research, it comes up a lot. What are points and what are closing costs? Because people are like, I never considered when you were quoting me a rate that there may be a cost associated with it. But that's why I always have the conversation with people of, social media, and it kicked me off, but I told it, go away. Sorry about that. So I just try to talk about overall budget, right? So what are we looking at all in all for closing? Is that 10 to 15,000? Let me show you what that looks like. Because we have down payment assistance, we can sometimes get a seller credit from closing. There's things we can do to help cover these costs if need be, but you also want to be prepared, right? If you want to be really, really, really strong on an offer for a house, you don't want to ask for closing costs. You want to go as strong as possible. So we want to be able to have these options up front and have that game plan put in place, which is why I think reaching out early is so important.
Absolutely. Very good. And as we're talking, we're answering your questions too. Those of you that have joined us in the room. So if you've got any questions about closing costs, what are they? Are they new to you too? Any comments, questions, statements of disgust? Throw them into the chat,
and we'll be doing this more live at 5. 2 Jamies is better than 1. So we expect to see you here asking us questions at some point. We'll continue to beg you to come join us because we enjoy it. But there's really not that many closing costs left. You've kind of already mentioned one, which is going to be recording fees and other taxes. So transfer taxes to get all the documents that are with the county that are in the seller's name right now into your name. That's normally going to be 0.01% of the purchase price. Easy peasy. So if $500,000 house, $50. $800,000 house, $80. Have a weird number, something and some cents. And they'll round up if it's something really wacky that they can't do. They're not going to take half a penny. So keeping that in mind, and then recording fees. So if you have a mortgage or if you don't, there's going to still be a deed to the property. But if you have a mortgage, we're going to record the note as well. So I normally tell people about $175 to $199 for that recording. It's essentially per page what the county is charging for the title company to physically and publicly record those documents with the county. The note does get removed after you pay off the loan, but it's publicly recorded, so it's not like the lender could ever change it on you, and that's mostly the reason for it. And then escrows after that. It's going to be taxes and insurance. This one I get a ton of questions about. I'm sure you do too.
I think the main reason why I love talking about escrow, and for the record, we're talking about Colorado mostly. I know we had some few people join. Hello, welcome. And we're talking about Colorado real estate in particular. I know I am only licensed here in Colorado.
Licenses.
Jamie is licensed in many other states.
We can connect you.
Yes. And so if you're joining us from outside of Colorado, not to fear, you know, a lot of this stuff may be applicable for your state. But I find escrow to be really interesting. One, because of selling sunset, because that's in California
Totally.
where they use escrow as a different term, or as a term for something else that we call just under contract. But also the funny thing about escrow is that
It
it's used in
is.
multiple different
Have you seen the
sentences when we're talking
Portlandia
about
skit?
stuff. And so when you're
Oh, I will share it with you. It
no,
is
no, I
so
haven't. I'm going to
funny.
look it up right
Yes,
after this,
they
though.
joke about
Yes,
how
please
it means
do.
so many different things, and everything they say is false. If any of you look it up, it's all wrong. But it means like 8 different things. Your escrow company could be the title company. Yeah, it's so silly. Under in escrow can mean under contract.
Yep,
Oh my gosh.
exactly. Yes. Yeah, and in other states, they say, you know, we're in escrow.
Yeah.
That means so much more than what it is for us. But here,
Yeah,
I'm sure you're
sometimes
going to
escrow
explain,
and
you know,
title
it's
is split as well.
we've got
So
our
it's,
two meanings.
yeah, it gets crazy. But yeah, when I'm talking about escrow and closing costs, it's just going to mean taxes and homeowners insurance. So definitely it's good to kind of have an idea of what these terms mean. But more than anything, have a good team. We're going to have your back. I'm going to make sure that you don't miss anything. Make sure you do your due diligence. But so your taxes and homeowners insurance, if you bought a house cash, would just be paid for on your own. So when you get a mortgage and you put less than 20% down, the lender's going to require you to have an escrow account where we pay taxes and insurance on your behalf, and we roll that into the monthly payment that you'll see on your account. So you can choose, if you're putting more than 20% down, not to have this, but you're normally going to have a fee on your rate. My recommendation is that you close with an escrow account. You can cancel it down the road and there's no fee to cancel it. So just pro tip. With that, yes, we're going to collect 12 months of homeowners insurance at closing. So one whole year. So let's say that we are closing January 18th, 2023. We're going to pay all the way to January 18th, 2024. Okay. And then we're also going to collect 2 months of homeowners insurance at closing. So actually it's going to equate about 14 months total, but you'll see it split out into 2 places. You'll see reoccurring and you'll see one time. So the reoccurring is the 12 months. That's something we're going to continue to pay out. And we're going to take that and pay it out, not from charging you one time a year, but from 1/12 of that amount in your monthly payment. So in the first year you have your mortgage, you skip 2 payments. Let's say you're closing this month in January. No payment in January, no payment in February. So first year you're in the home, you're only paying for 10 months of mortgage payments. So if we just let you get away with that, we would get all the way to January 18th, 2024, and we would say, shoot, we're 2 months short. We need 2 more months to pay your homeowner's insurance out again. And it can change, so that's something we can talk about as well. But with that, we take those 2 months, because with the 10 months you'll pay, plus those 2 months at closing, it'll equal another 12 months to pay out again next year. Similar thing with taxes, except for they're paid backwards. So seller's going to pay in some property taxes from what they owe for the year. If it's January, they're going to pay in for 18 days. You know, we're going to look back and see if they've paid already for last year, and if they haven't, they're going to pay in for that as well, or they're just going to pay the bill at closing. So they're going to handle whatever's owed, and the title company actually is the facilitator of that. They're going to make sure that those taxes are paid. With that, though, you may see anywhere from 6 to 12 to 18 months on your statement, but some of that may be split out by the seller. Some lenders calculate it differently on their form, but essentially you'll have that 2 months of property taxes that you're paying, because 10 months of payments plus 2 months at closing equals 12 again. So it may show something a little different than 2 months, but some of that's going to be buffered in by the seller. Now, taxes are paid out twice a year. So sometimes, like when we get really close to tax season, like right now, let's say we're paying in February for you and paying in June. If we're closing in January, you may actually have to make 6 months in upfront, because we're expecting to have to pay a whole bill, and then you might get refunds down the road. So it's a really good idea to have this conversation with your lender about timeline as well, to say, when are you planning to close? Because they're going to calculate closing costs kind of based on when you're planning to close and what your timeline is, as opposed to just kind of throwing some numbers at you. So yeah, escrows are important and can really change things. Like, for example, if your lender's really lowballing you on insurance, and it's just saying, oh, it's only going to be $800 for the year, and you get it back and it's $2,300, that difference is going to show up in your closing costs and your monthly payment. So yeah, sorry, long one. Whew. What questions do you get about escrows?
Well, This
It
is
is.
a
This
whole
is
nother
like a
world. I feel like this
total
is a
second
whole nother
video.
topic to talk about. Yeah, it really is. But I think because it's like I was saying, like it's when you talk about escrow or when I talk about escrow, because I'll talk about mine and how that's different with earnest money later. But with when it comes to some of those, I think a common misconception that I see all the time, not just as a realtor, but before this, when I was a HUD-approved counselor too,
Yeah.
especially talking with people like CHAPA folks who are getting CHAPA loans. One of the biggest questions that I would get is about how those get paid. First of all, like, why do I pay it up front, which is what you just explained so well, that you're paying that up front because they're going to be paying it. They're paying it in the future, and then they're coming back
anyway. So it helps.
Yeah. And so separate from that, I mean, not a closing cost question, but important. How does the escrow account get refilled during the year, Jamie?
Again, that 1/12 is going to be calculated. You're going to hear PITIA. Ugh. What that just means is principal and interest, your mortgage payment, and then taxes and insurance. TIA is going to be like HOA dues if you have any. So that taxes and insurance, we do split that out monthly. We lump your payment together, and then we pay that into, it is actually a savings account. And then when your bill comes due, we have a servicing department that collects the bills, pays out your insurance. If you change throughout the year, you have to let your lender know because you'll want to cancel your old policy, get a refund, pay into your escrow account, or pay directly. So it's really important to just know who your servicer is going to be too, who's going to be handling my escrow account after closing. Because for me, it's Guild Mortgage for most of my loans, except for down payment assistance. And then some other people, they may sell your loan off after closing, and then somebody else is handling your escrows. So that's a good question to ask as well.
Which is, again, so I want to bring up something else because you just brought it up and I think it's really important. Not closing cost related, but mortgage servicer related, because you just said that Guild Mortgage services their own loans. And so if you're new to this home buying world, that may just sound like a bunch of gibberish, but super important, because what's most common is that when you get a loan, it's going to get sold off. After you work with somebody, it's going to get sold on the secondary market to a different servicer. And they're going to be the ones that are managing that escrow account. But you don't have any control in that. So you just get a letter that says, hey, we're selling it. And after you verify that that letter is real, then you're going to find out and set up your new account with your new mortgage servicer. But hearing that Guild services their own loans is really important and a really good question. If you're a new buyer and you're talking to a lender, whether it's if you're talking to this Jamie here, or if you're talking to a different lender, ask them about servicing loans afterwards. Do they service their own loans? Meaning, are you working with the same company that underwrote you and got you approved? Or is it just going to get sold off to somebody else, which is common and not too much of a problem. But if you fall into issues, in the future, just with everything that we saw with forbearance and loan forgiveness, mortgage forgiveness, stuff like that over the pandemic, who your mortgage servicer was mattered a lot.
And so, which I can only say that because they were, acquitted and prosecuted. So it's definitely important to have those questions. Well, in this be careful. You can get sued over something stupid. Let that sink in. No, just kidding. But with all that, it's really, really important to just the way that we described it today is A, B, C, D, how it's described in the loan estimate. So if you are under contract or you were under contract, you can pull up your old loan estimate, and this will align with that document that you have. The last line could possibly be lender credits. That could be there. And then it does break everything down in a tiny box below, but this can have a couple different additions and subtractions that are based on the lender. So I'm not going to go too much into that one. If you have any questions, screenshot it to me. Send it to me. I'm always happy to go through a loan estimate with anybody. I'm licensed in Colorado, so I can't originate outside of that, but I do have teammates all over, so let me know. And then the only other thing I skipped is prepaid interest. So let's say we closed on January 18th. We're going to just keep using that date. You don't have a mortgage payment in January or February. Like I said, date that you close and the month directly after, no mortgage payment those months. But you do have a prepaid interest charge. So this is kind of the same as car loans. You're probably used to seeing this if you've gotten a car or any other sort of personal loan. You're going to skip a couple payments, but there's like an interest charge at closing. And so you're going to pay interest from the 18th to the end of the month, no payment in February. So you totally skip the month directly after. But that's something to consider as well. If your budget is really limited, we're going to want to plan your closing near the end of the month. So the 30th, the 31st of January, maybe. So you have 1-2 days of prepaid interest, as opposed to the first of the month, which could be, depending on your home purchase price, it could be $1,000, it could be $3,000 and your interest rate. So definitely planning that, reaching out to your lender, and having a lender who will pick up the phone and say, what's the address? I'm going to look up property taxes. When are you planning on closing? So that you can get an accurate estimate of those closing costs and review them before you're truly under contract and you feel like you have to go through with this. So yeah, it's just good to have this information up front.
Such a good point, because it has definitely happened to buyers that I've worked with that didn't get a very clear picture of what that looks like beforehand. As clear as possible,
Clear as mud.
but not as clear as possible. That's the point. Clear as mud, enough for them to understand. And then we go under contract, and now all of these things are coming up. There's these new costs. I mean, I've definitely talked to a lot of people who found out after the fact, after they go under contract, what some of these things are going to look like, or that they exist at all. And so really great that you're even offering to have those conversations, because I just love it when I'm working with a buyer who knows that when they're putting in an offer on a home, they know that they're comfortable with it because they've been educated by their realtor, by their lender. They are comfortable with what that payment more or less is going to look like and what those figures might look like.
Yes.
And that they can move forward in confidence.
People come to me, and I'm sure they come to you too, and they say, how am I supposed to do this? And that is not our job, actually. Our job is to empower you with information and education so you can tell us how we're supposed to do this. But we know that we're the experienced ones, and we're the ones who have been in the industry and who have the experience with housing agencies and lenders and stuff like that. So we're here to just, empower you with that information, empower you to be able to make that offer, because you know exactly what you're dealing with. If you want to compare a 2-1 buy down with a 3-2-1 buy down with CHFA down payment assistance, you want to also compare putting 3% down. Like, let's go over that together before you make that offer. Let's break down what that total cash to close is going to look like. Let's break down what those monthly payments are going to compare at. And then let's go in knowing what we're dealing with, as opposed to like, I know you're in love with the house. That's the easy part. We just want to make sure that you don't have to be in love with the numbers, but you have to be accepting of them. Yeah.
Well, perfect. Well, thank you so much,
timing.
Jamie, for that
Absolutely.
really great explanation. I know, yeah, and we kept it to 5:30. Before we go, one last call for any questions. We'll be here to answer your questions. We'll also take them in DMs after this as well to answer for our next live at 5, which we'll be doing. Yes, or leave a comment. We'll take it all and happy to answer your
When is our next
questions,
live at
thoughts,
5?
and
That
concerns.
one's going to be in February, unless you guys demand to see us sooner.
You totally.
I know.
That's so far away.
Again soon.
I'll pull it up here. Let's see.
Leave 2 Jamies in the room for too long.
Tentatively,
the power.
I know, because both of us with our iPads and all our devices. We are scheduled for our next live at 5 on February 13th. That's another Monday, 5 o'clock, right here.
So much better than one. We're going to give you both of us, and we're going to answer common questions or your questions. I'm thinking about making a poll and kind of taking some from the street answers. So we're excited to collaborate with you guys this year and just bring you a lot of information. And we're going to sprinkle in little tidbits about us. So let's wrap up the meeting today, Jamie, with what's something fun you're doing this month in the community.
Oh my gosh, I'm so glad you asked. I just started a volunteer shift at Neighbor to Neighbor, which is an organization where I used to work as a head counselor. So now I get to come back, and I've started to do that. So I'll be doing that all 4 weeks this month, and hopefully into the future too, answering their phones, greeting folks, and being right back into a world that I just loved.
And now you get to do a little bit of both and give back. So, and if you guys haven't heard of Neighbor to Neighbor, they're amazing. Highly recommend looking into them. And you can always ask Jamie Hammond for more information, because she is got even more than I do, which is, I love that. I'm so glad we met each other, because I was looking for that. Yes, and then I am, we're doing so much.
What about you?
Boss Babes. So we have a local community group that is for supporting women. You don't have to be a woman to be involved, because anybody can go out and support women if they want to. So we are meeting twice more this month. We met this morning for coffee. We're going to meet next Monday morning for coffee. So if you want to come meet me for coffee in Loveland and then join me and Jamie live at 5, that sounds great. Or if you can't make it, I know if you can't make it
A
in
big Jamie
February,
day.
we're meeting
The
on the
most Jamie day.
27th at the Peaceful Birthing Center in Fort Collins. And we're going to talk about widening your business lens. Essentially, she's going to go into diversity. We're going to have some safe conversations about what that looks like. And then we're also meeting for our book club tomorrow at 5:30 p.m. If you haven't read the book this month, it is The Connector's Way. And you don't have to join us. We're going to record the live kind of discussion, and I'm going to share a worksheet to the group as well. But if you haven't read it, The Connector's Way is less than 2 hours on Audible. And I really enjoyed it. I thought it was super cute. And it really just talks about building your relationship business. So it was super fun.
I love it. It's on my queue.
Yeah.
I just haven't gotten through the one that I'm on
car from
right
here to
now.
there,
I thought about
that's
it.
the kind of
Like,
audiobooks I look for.
100%. Yeah. When the car is the office,
Of
for sure.
course.
Well, thank you so much, Jamie. Thank you to all of you who joined us, and we'll see you again next month, Friday,
Yeah, live
Monday,
at
the
5.
13th
Can't wait
at
to
5.
see you guys. Have a great day, Jamie.